Hey, good day, everybody. It's Tuesday, the 6th of April, and Tuesday, and it's 1 o'clock Pacific. It must be time for On the Radar, live market updates with the active trend trader. That's me, Dennis Wilborn. Really glad you could join us today. As we wait for folks to come on board, I'm going to go ahead and start the recording. I'm going to basically say aloha, everybody. Doing a little bit of a different type process. I found out last week as I was double checking. I have a web camera on my computer that's separate from the on-screen camera, and it's a higher quality. And for somehow my system had gotten crossed up, and I was putting up the wrong camera. And so anyway, so now you got a much better look at the handsome guy. And I say that in jest as having some fun. And so what we want to do is go ahead and jump on and see what we have going on. For why the other not on. I'll double check and make sure we are or not. It's not showing anything. Let's see, did I actually start? Yeah. Started the broadcast, everything's recording. So anyway, let's go ahead and get going. Let's jump right into what is the market showing us today. Here is a picture of the S&P, the SPY is what we use for the proxy for the S&P. As you can see, I wanted to throw on this Fibonacci to say, hey, what's going on with this fib? Is this fib showing us that we are, continuing to move up strongly, which of course it is. However, we have run into a level of resistance, and it is the 1618 extension of this move up. Now, normally, yes, it can make it over all the way to the 200 occasionally. And what that emulates, just to give, if you're not familiar with the Fibonacci's, what that emulates is the what that emulates is a symmetric move from this high here back on the 17th of March down to the low here on the 22nd of March, and then we've met the 100% retracement. Now it's gone ahead and extended another 1.618 percentage above that level. Oftentimes, these are the 1618 or the 1272 is where the price move will kind of slow down, and so that's what we're seeing. Is that's going to happen here. As you can see, we closed today right. We broke through it. Price action on the S&P broke through it. And we have a shooting star in place. Now, that is a bearish reversal signal that we want to be paying attention to tomorrow. As you can see, the TSI is up in the upper reversals area. And we could, it has not reversed yet. But again, price action-wise, yes, we have a bearish reversal signal in place on the S&P. What about our buddy, the NASDAQ? Oh, this is even better. That is a reversal signal and a shooting star and a bearish harami right there. So that could lead us to at least a pullback into where? Well, pull back down to these past levels of support where we had the breakout from, right there about the 324 down to the 322 level, which also at that time will correspond to what? It will correspond to the 8 and the 20-day moving average moving up. And what we want to, what I'll be doing is, since we have now gone back into an uptrend, and I'll show this over on the weekly chart. As you can see, the weekly chart, the TSI has crossed up to the upside. We are starting to move back up towards the past highs. Excuse me. So I would look for some kind of a pullback back into the moving averages, because we've gone up, literally 1, 2, 3, a little bit of a pullback there, 4, 5, 6. 6, 7 hard days out of the last 8. A pullback to digest the gains is totally appropriate. Would not be surprising. Do I want to jump? What kind of a trade would I want to jump on to basically head back down to the downside? I could either do I could buy a put, or I could looking to trade SQQQ. And SQQ should be showing that, yep, it has a bullish harami because it is the inverse. And so if it goes above the high of the low day, that might give us an opportunity to go ahead and jump on a trade on SQQQ. How far would we ride it? Probably up into the moving averages. But you have to remember, each one of these, and I'll just show it to you really quickly, each one of these gap downs represents a zone of resistance on the way up, all the way until you hit the moving averages. Just as the for the Qs, each one of those gaps on the Qs represents a level of support where we could stop anywhere in any of those. Now the question we're going to always ask ourselves is there enough juice here that would warrant a downside trade? In other words, how much could it potentially fall? So if we fell down to the first gap, okay, that is a $5.44 move. If we fall down to the second one, that would be or the breakout area, excuse me, that's about $8. So yep, I think that would be enough with the anticipation of $4 to $5 to $8 move to look at doing a counter trend trade. The market is not out of the woods yet. As you can see, as we've pushed higher, it has not been on increasing volume. What is the other entity that we want to be looking at? The Russell. The Russell has been actually weaker than the other entities. And what do we have today? We have basically, we came up and then hit our high yesterday. As a matter of fact, we gapped open to the high yesterday and then sold off almost the whole day. Then what do we have today? We went back up and tested the highs, fell down into the lower half of the price action. And so we can anticipate a pullback again on this. And it will basically, the question we always want to ask, which a lot of times we won't know until it actually happens, is are we getting this move up, pull back, move up? Is this just a pullback into the last breakout area? I will alert somewhere between the moving averages, about 222, all the way down to about 221. That's where I will posture an alert or put in an alert. And if that rings off, then I'll be looking at, is it providing us an opportunity to get on a long trade to the upside? Remember, Russell is weaker than the other entities. Now, with the moving averages all heading up again, we can anticipate what I call the catching mode. So oftentimes they will catch the price action, stop it, and then it will reverse at that point. From where we are currently, where we closed, to the moving average is about $1.77 through the 34-day moving average, $2.78, and all the way down to the 50. We're talking about $5.50. So that's what I have for the indexes. Nothing that I'm really in a hurry to jump in on, because all I have is basically yes, I have a bearish reversal signal on all three indexes. However, we have no confirmation of that, and I'm looking at, from what we're seeing right now, the clues are telling me that it would be just a potential pullback into a level of support and then a bounce higher from there. So I have a couple of stocks to share with you today that you can take a look at. They look kind of interesting. One, I'm going to give you a bearish Chinese stock trade potential, and that's on BIDU. BIDU is looking really weak. Yeah. It is well below all of the moving averages. We went up and made a slightly new high. It sold off at this point, and I'm thinking, was that due to earnings? And the answer to that is no. It may be in preparation of earnings, but as you see, it fell fairly hard. What is it currently working on? It's working on moving back up into the moving averages. So if I, anywhere from where it's at right now up to the, in this case, the 20-day moving average, or up to the 236 level, just up to the 236, I would be looking at taking a trade to the downside on this. Or if I get up here and get a, I would like to see a bullish reversal signal, and then take a trade down with an anticipated or expected run down into the retest of the 200-day moving average, and that's going to be about a $50 run. So we'll be doing an option trade on that. So that's one. Now here's a bullish Chinese trade, and it's NIO, their car company, or one of their electric vehicle companies. As you see, yes, price action is all down below the moving averages. However, we are putting in a what could potentially be a higher low. If we take out today's high, and I would say break above the, in this case, it's the 20-day moving average at $40.92, that could give us an opportunity to trigger into a trade on NIO. And also, this does have weekly options, and so that would give us an opportunity to also look to trade some options in preparation for it to go into earnings season. As we sit right now, it is really working. It is working hard. We have there was the major low, higher low. Take out this swing high right there at 42 bucks, and then we've still got, still pay attention. We have overhead resistance where? At the 34-day moving average and at the 50-day moving average. Once those are cleared, and oftentimes what you'll see happen, price action will move up to there, reverse down, come back, retest support, and break out from there. So we'll be looking for that happening. Again, NIO looking pretty strong. The other stock that I want to keep your eye on, it's trying to make a decision. And that's Tesla. Tesla, as you can see, it basically had a sell-off, very similar pattern to NIO, rallied up, came back, put in a higher low, and now is trying to break out and put in a higher high. Price actions yesterday moved up towards and slightly above the 50. Today it closed just at the 50-day moving average. But as you can see, price action is now above all of the moving averages. I'll look towards I'll look at the intraday chart for Tesla to look for a potential trade off one of the levels of support. Right now, I have nothing. So let's see. And the last one I want to talk about, and this was a really pretty trade on. Actually, it was a substitute for one of the other. For one of the other stocks that we had. Get the chart back. This was a substitute for one of the other stocks that we had on the autopilot top 5 growth stock trade. And you love it when you replace one stock with another one and have that stock perform. And that's exactly what did take place on FUTU today. We had basically, here's the weekend here, and we said, hey, if it pulls back into the 820 or back to retest this downtrend line, and then oftentimes what you'll get a retest down to the downtrend line, then it kisses the downtrend line goodbye to launch itself up on a new run. This was an excellent trade. We jumped in this trade where at hold on just a second. Of course, I don't. But we got into the trade about 139, right there off of the 8-day moving average, 139.69 or something like that. And I love it when this happens. It reversed for us and ran all up, way up, and took out our first profit target at about $153. So we went from 139, let's say 140, up to 153. So a $13 gain, and all in one day. And basically, because we had our conditional orders in, it was done whether you were working, whether you were watching the market or not. It happened. And so that's the way I love to use those conditional orders for that. And then last but not least, I think that, yeah, that'll do it for today. If you do have a stock you want us to review going forward on Wednesday or Thursday, when we do our next on the radar market update, please just drop me a note. Drop a note down in the, if you're watching this on YouTube, down in the comments section. And if you're watching it on Instagram TV, again, just drop a note in there saying, hey, Dennis, take a look at this chart. And do me something. If you will do something for me, I would appreciate it. One, suggest this free service to your friends who might be interested in trading the markets. And if they're looking for stocks to trade and want the setups and all that kind of stuff, our autopilot trading system is really good, and I think they would like getting in on that. And then, after that, after they learn how to do that, then we can jump them up to a premium member to get all the good stuff. So until later, I think it's Elsie. Good to see you. Is that, yeah. Have a wonderful rest of the day. I'm going to get ready for the Bay Area Moneymakers, which happens later this afternoon. So again, from me to you, aloha, and God bless everybody.